Everybody's listening me? Okay, now I can listen my voice clearly. So the test transmission is done and we can do some analysis now. So first thing first, I will begin my analysis with S&P 500 index. Dow Jones is 142 points down so far, S&P 12 points down, and pretty much negative market across the board. So let me begin my analysis with S&P 500 index. As I discussed in my last video that I will show you the long-term trend of S&P 500 index. So you can see this, this is a long-term trend starting from 1930, and this is the low of 1932, 4.40 level. And what I did, I just simply connected these two peaks, the first one here and second one here, and taken a parallel trend line of the same. So we got a lot of resistance during 1960 to 1970. And if you just zoom it clearly, you can find it since the bottom that we touched after the peak in 1937. We touched the low of 7.47 back in 1942. So we got a very good low here in 1942 of 7.47, and since then the market was completely on a higher side. We got a lot of bullish market throughout these years, and market peaked out later on in 1968 of 108 levels, and then in 1973 it went as high as 120 levels. So this is a very critical level. This zone is very critical. And after this zone we got a massive correction starting from 1973 to 1974. We got a very good correction down here of 62 levels. And since this high We got a rapid acceleration on the upside. Market went up as high as 2,430% from 1974 to 2000. So almost 26 years and 2,400% return. It was trading back in 1974 at 62 level and went up in 2000 till 1552 levels. And remember, this is the time when we got a massive correction in America. 3 consecutive years of consecutive correction, and later on market touched this long-term support line and bounced back. So if you just notice this level, this is a very important level, that market went up continuously 5 years from the low of 2003 till high of 2007. So this was a consecutive 4 years of rally, and then we got a subprime mortgage 2008 global crisis. So it is a very important trend line that is intact since 1930. We are within this trend line, this medium term upper trend line, and this one is a medium term lower trend line. So within this trend line, this is apparently the resistance line and this one is support line. The market is moving within this range. And at times when market is stretched out, so it fell down a little to touch the lower boundaries of this support line, and when it takes support continuously on these trend line, it went up till the high of the resistance line. Remember, this is a yearly chart. You are watching a yearly S&P 500 index chart. So anything important will be within this price performance. So every candle is a single year performance. Okay, on the right hand side of this window, just on the upside, you can actually write any message and I can read it and I can answer you. Pretty interesting setup so far in S&P 500 index. You can see a long-term resistance line. Market is moving within this long-term resistance line, and there is a short-term support line as well. So it's a long-term effective channel line. Pretty interesting to see that how market is trading within this range. So at times we get confused that whether market is moving within the direction or not. So you can easily see since the low of 1974 of 62, it went high of 1552 within this channel. And now again, after the subprime mortgage crisis in 2008, it touched the low of 741 and went up again within this red channel line. Okay, so first thing first, what I would like to tell you is, if you just consider the key pivotal point of S&P 500 index historically, so what you can see is it touched the high here in 1932 with the same trend line. I'll just assign a different color to this so that it will be easier for you to understand. I'm giving it a green trend line. So you just notice here, it was trading within this higher range of the channel, went down, touched the lower range of the channel here, yes. Hello Burgle Sky. Yes, we are in the middle now. We are in the middle of this range, and I was just trying to show you the channel. First here we got support back in 1979, and remember this was a very crucial support line, and market touched this lower support line and went back again. So whenever it touches the lower range, it went back to touch the higher range. So if we just draw a trend line, so you can see what is happening now. I'm just giving it as a broader range so that we can understand it. You see, this is a long-term, very long-term price performance of S&P 500 index. See, we are touching the higher range, coming down to the lower range, and whenever we are touching the lower range, we go back again to touch the higher range. And in the peak crisis, in a peak global crisis, we touched the lower range, lower support line of this channel, and whenever we get extra bullish momentum, we go beyond this middle range and touch the higher range. So coming back to your answer, yes, yes, I agree to you, because we just touched the lower range now, so we have the potential to go above this middle range, which is a red shaded area, and we can go above this range. But for that, I think we need to wait till 32,500 because we can see a long-term resistance line is coming somewhere around 32,000 level. Because if we go back to the past in 90s, what we noticed here is whenever it goes above, like 1995, whenever it goes above the resistance line, something here, then it go above the middle range and touch the higher range of the channel. But for the time being, if we zoom this closely, so we can see this is just hitting the middle range and the resistance line of the middle range and just trading within this range now. So we have the interpretation here is, for the time being, if we assume this is a sort of bullish engulfing candle, because this candle, this current year of 2019 has engulfed the 2018 candle. So there is a higher possibility of a engulfing bullish candle right here, and we might go up to touch this higher range of the channel. This burgle. And remember, this is a long-term chart and I have converted it into logarithmic chart. So obviously within the short-term time frame, in my last video, as I discussed that the market is trading in the impulse move, and the first leg of the impulse move is just maturing right now. So obviously you might see some correction, and right now whatever we are witnessing is the correction of the run-up that we witnessed from the December lows of 2340 till the high of 2820, 2815. So we are just facing those correction for the time being. Hello Alizion, thank you man for the feedback. It's just my first live stream on the internet, so I'm just trying to sort of do some live analysis, because I get a lot of questions from the different investors to know what is happening around the world technically. Okay, I'll move forward as well. So this is it. This is S&P 500 index, and we are just within this middle range, and within this is a yearly trend. So if we go into the daily chart and weekly chart, so you might see how things unfolding in a short-term time frame. Just have a look on my recent video on S&P 500 index, where I discussed the Elliott wave expectation, what is happening in S&P 500 index in a daily time frame, in a weekly time frame. So you might get some sense for S&P 500 index. I'll come back to Dow Jones. I'll come back to Dow Jones index. First I'll go to gold, and we'll have an analysis on gold, what is happening in gold for Amir Soni. Okay, so first of all, We are starting our analysis from a longer term perspective. So first we will begin our analysis on a longer time frame, then we will go to the weekly time frame, monthly time frame, and then daily, and then intraday. So this is a yearly chart of thank you Virgil, thank you for bearing me. This is a long-term trend line of gold. You know, the interesting and the best part of technical analysis, you get a very longer term price performance in a single graph. This is just a single graph and you are just getting an idea what has happened historically in gold and where the gold is standing right now. And as per the historical perspective, given the price incorporate every available information, what's going to happen next. So this is the best part of technical analysis. You get an idea. Welcome Borgel. You get an idea what is happening on the gold right now and what has happened historically, and on the basis of the historical data and the current information, we try to sort of predict what will happen in future. So coming back to the point, it touched the low of 253 back in 2001, and since then we got a massive run in gold. Very big move, more than 650%, more than 650% move from the low of 2000. And almost 1650 increase from the 2001 low. Remember, this is a yearly chart, so we need to get an idea that what has happened historically in gold first, and try to grasp one idea that always try to start your analysis from a bigger picture. Because once you get a bigger picture, the same thing is, is applicable for the lower time frame as well, which is called fractal in nature. Because the best part of the fractal is whatever you can assess on a macro level, you can have a same idea on the micro level as well. So start big, go deeper until you get a minute or tick by tick chart. So coming back to the point that we got a consecutive years of bull run, and then some negative year after 2012. We got a first major bearish candle, then the second one in 2014, and then 15, and then in 16 we got some respite. So the touch that we witnessed back in 2011 of 1921 is the peak for the gold for the time being. There are many expectations for the time being that the gold might go up again to the 2011 high. So let's get deeper and have a look what is happening monthly in gold now. Okay, let me remove my analysis because I have attached different analysis in gold, so it might be a problematic for you guys. So I'm removing all those analysis and keeping my chart plain, only the candles. Okay. So coming back to the monthly chart, what you can see now is you are getting a lower low. The first thing first that we discuss here, we got the first low in 2012, then got the confirmation back in 2013, and since then we are getting a lower lows, but until 2015. But in 2016 we are getting a whole new story, man. This is a whole new story. We got the first pivotal in 2016, touched the high of 1367, went down as low as 1122, and then went up again 1365. So very plain analysis, very simple, no rocket science, just keeping the analysis simple for the time being. We got two touches here, and you know, the one important part and one important characteristic of drawing a trend line is try to draw a trend line which touches the maximum points. So what we notice here, that we got first resistance line range here, and then the second one something here. So within this range, this is a monthly chart of gold. Within this range, of 1375 and the low of 1122, we are consolidating. We are consolidating within the range of 1375 and 1122. We got the two highs here, consecutive highs. Was a sort of triple top, just like here, because we got another high back in 2014 of 1392, then got another high in 2016 of 1367, and again in 2018 we got a 1365 high. So the highs are there, the upper range is there, 1360, 1365 is the upper range, and the lower range is also well defined. One important thing I would like to highlight here is that whenever we change our call from the bearish market to the bullish market, we have to have a higher high and higher lows on a broader term time frame, like weekly time frame or a monthly time frame. In this particular case, I'm just analyzing on a monthly time frame. So what you can notice here is that the gold is not making a higher high. We got the initial high of 1375 back in 2016, then made a low, but we failed to break the previous high. And yet again, the lows is higher than the previous one, because the low here is 1122 and now here is 1160. So the low is higher than the previous one, but the high is lower. So we are not getting a lower low and a lower high, or we are not getting a higher high and a higher low. So either we get a higher high and a higher low, or we get a lower low or a lower high. Both is actually crucial for determining a trend. Higher high, higher low, uptrend. Lower low, lower high is downtrend. So neither higher high, higher low, nor lower low, lower high. So this is a sideways. This is a consolidated market in gold for the time being. And yes, on a monthly time frame, and yes, within a weekly time frame we got some respite, like for example from the low of 1160 back in 2018 August, we got a high of 1346. It was well received because whenever we consolidate within a range, we goes as high as 78% of the previous move, which is a very good Fibonacci retracement level. You can see here it just touched the high of 76% of the total move, failed to close above the 76% of the retracement level, and then coming down, and we got a first candle which is a reversal sign. We got a first candle which is a reversal candle body, and then we got a confirmation. So it's a bearish call on the gold on a monthly time frame now, and we might get a correction till 1250 in a zigzag pattern, because if you go deeper you might see some Elliott wave analysis in 5-wave move up and then the correction on the downtrend. So let's go deeper and have a look what is happening in gold on a weekly time frame. So have a look. As I told you that it is an impulse form. The first impulse you got here is 1, then wave 2 here, then you are getting within the impulse 1 2 1 2 3 4 5, then 3 4, and then 3. So there might be a possibility of wave 4 is in the process of completion, and within this downtrend you might get some respite on the uptrend first, something like this. Because it's a flat correction down here, and then you will get another correction something like this, because this is a wave 4 and wave 4 is a ABC pattern. So the first A will be here, then the B up. So within this time frame you might get some upward correction initially, of 1320, and then you will get another leg down for wave C, and it will come down again until it will go back for wave 5. So this is the probable move of gold right now, Amir Soni. Hope you understand it, and be aware of the move now, because if you are clear with the move that whenever it will go up in wave 4 in the sub wave of wave B, and then it will come down again in wave C. So the first move will be, let me show you. First move is A here, it will come up in B, and then it will complete wave C until it will go up again in wave 5. Yes, and this is a 3-wave structure. Okay. Okay, you are talking about this whole move is A, and then B, and then C, right? I personally don't think so, because in a triangle pattern you get 3 3 3 3 3. So every single wave is a 3-wave structure. It's something like this: A, B, C, D, E, until we get a bang for the final degree. So every single wave is a 3-wave structure, something like this. And then you will get a 5-wave up. So this is a triangle pattern. And within the triangle pattern, yes, for the time being, this current structure, if we particularly talk about this 1, 2, 3, 4 and 5, we might get a correction something like here for the wave 4, and then we will complete a wave 5. So the next probable move is going to be very telling. Either this whole structure, this one, if it is not impulse and if it is in corrective wave, for example, this one is A and you are talking about this second leg 2 is B, and then it is coming up in C, and for example, if you assume that wave C has completed in 3 3 5 structure, which is the possibility, I cannot rule out this possibility. But if this is 3 3 5 structure, so you need to have a 3 3 3 3 3 structure in the triangle pattern. This is a consolidated range, as I told you, on the monthly time frame, because there is no higher high or higher low. At the same time, there is no lower low and lower high. So you need to wait until it will confirm the direction, because this range is very narrow for the time being, and we have to wait for the direction until it's really start coming down. And as we saw earlier, that whenever it touches the lower boundary, it goes up, and then it fell down again and it is going up. And yes, it is a triangle pattern, because we have a flattish high and sort of ascending triangle, because this slope is upward. So you might get a breakdown, but until you get a breakdown, you really have to wait and see. We cannot expect the price reaction in advance, so we need to wait and see how things unfold in next couple of months especially. And if this trend line, this green trend line, if it breaches for any reason, so we might anticipate the breakdown of triangle and the lower targets that you are anticipating. But at the same time, if you will get a higher high, which I just discussed here, 1375, any successful close above that 1375 will rule out the possibility of triangle pattern, and then you need to look other way around. So until you are within this range, you need to trade accordingly. You need to place your stop losses accordingly, because we haven't got the higher highs, not the confirmation for the bullish trend, nor the confirmation for the bearish trend. So this is it for gold, and let's move to, I hope I answer your question, and let's move to Dow Jones now. So now I will discuss Dow Jones. Thank you, Amir. Okay, Borgel, I hope you are with me now. And thanks for bearing me, man. Here come, I'm answering your question. Woo, woo, woo. Dow Jones. Way back. Just look at this trend. Just have a look. And tell me the answer, what you are looking at. What you are looking now in Dow Jones. Anyone, anybody? Thank you, Burger. This is a long-term trend of Dow Jones Industrial Index. By the way, how many of you know about the history of Dow Jones Industrial Average? You know, it was a railroad index, and Mr. Dow, who is actually the founder of technical analysis, who has given the concept of price and the assumption and the basic assumption of technical analysis. This index is named with Dow Industrial Average. So in 1885 he actually written a paper about technical analysis, and he has given some assumption for technical analysis. For example, he told us that the price is non-random. Whatever you see in the price, Dow back in 1885, he given us the concept of technical analysis. He's the king, he's the god of technical analysis. He told that price is non-random. First time ever, he gave us the concept that price, whatever the price you are watching on the chart, you are observing on the chart, is non-random. Excuse me. It's not like you will get the price abruptly. There is a sequence to it, and we need to understand what is the sequence. So first thing first, he told us that the price is non-random. Second, he told us that price incorporate everything. Whatever you have in the price today now has incorporated everything. So you don't need to wonder about what is the impact of XYZ news, what is the impact of XYZ EPS of the particular company. You don't need to worry about, because the price incorporate everything. That's what the Mr. Dow has taught us. So price is non-random, price discount everything, and prices are fractals in nature. The third assumption, very important, prices are fractals in nature. What do you mean by fractals? Fractal means whatever we see on a longer time frame, we see exactly the same on the lower time frame. Isn't it very interesting and amazing that whatever we looking at the higher time frame, whatever we looking at the yearly time frame, we will look the same in monthly, in weekly, in daily, in hourly, in minute. Same rule, same pattern, same analysis approach is applicable on 5 minutes as well as to 5 years or 50 years. Black box theory in psychology same is. Yes, man. Psychology, I say, you know, if you want to learn stock market, if you want to learn technical analysis, learn psychology. Learn neuroscience. Learn how people behaves, because whatever we are interpreting here, whatever we are analyzing here is more of a psychological analysis. It's more of a sentimental analysis. So the price behavior itself shows how the crowd behaves. So coming back to the topic, it's, you know, I will drag away from the topic. So I'm coming back to the topic on the technical analysis of this chart. I just went back away from the topic just to discuss about Dow theory and everything. I hope I'm not taking much of your time. So coming back to the Dow technical interpretation. Hello Messam. Messam Zedi just told that Dow is on the brink of testing new high. Wow. Let's have a look. Okay. Okay, so first thing first, we are getting a low here in 1932. The first high we touched in 1929, which is the high just before the Great Depression, and then it plunged down to 41. So what I'm doing here, I'm just trying to touch the maximum peak points. I'm just trying to touch the maximum peaks. Nothing is special, nothing very calculated. I'm just trying to see what is happening in Dow Jones from a longer term channel perspective. So one thing we can notice here, this area, this zone is very critical. We got a very short term breaches here initially back in 1936 and 1937, but in 1937 it failed to close above the pivot level, fell down again to the low and went high. So this zone is very crucial, this zone. And then again we got the same resistance, something like here. We got a short-term breaches, fell down again, got a resistance consistently here for next few years and then plunged down. This is a subprime mortgage crisis. This is a global meltdown again. And yet again, trading from the same level, resisting the same trend line. Have a look. So we are getting support on this zone. I'm not doing a very complex analysis for the time being, keeping my analysis simple to trend and price. What I assume, Borgel, that we touched the low here, so the wave 1 is something like here, 1939, because it goes in tandem with S&P 500 index. So the mega 1 is here, then we got the touch, we got the low of wave 2, something like here. And then within this grand cycle, we got a minor degree waves as well. So what we got within this grand super cycle, we got a primary degree cycle as well. Wave 1 here, wave 2 here, wave 3 here, wave 4 here, and we might be heading towards the completion of towards the completion of wave 3. So this is a very long term interpretation. I might be wrong, but this is what it looks like to me. Wave 1 here, 2, and something like wave 3, 4, and then wave 5 is completing something like here, and then we got a ABC structure down. We can look it again here, 1, 2, and within this wave 1, 2, we got a very good correction. So you might get the possibility of wave 3, 4, 5. So this wave 3 will come up here, and then wave 4 down, and then we are heading towards the wave 5. So what I need to do, we need to go deeper and have a look what is happening, because in a longer perspective, we are in the grand super cycle. Yes, as per the guideline of Elliott wave, tells us that wave 4 should be the lower range. This would be here, excuse me. Wave 4 should be the lower range of the previous higher degree of wave. So what do you mean by that? That if we will complete a wave 3 here, so we will complete wave 4 something like here. It should be above this level. So obviously it should be above 6,000 level, and let me tell you, this is a longer term of analysis. So if we go deeper, we will find another impulse move here, weekly time frame, and then we will get some lows down here. So 15,000 level would be another key level. And let's go deeper and have a look on Dow Jones Industrial Average on a monthly time frame. You see, this is the same move, the same low that we got back in 2008, and ever since we got the low, it went up rapidly. And if you just look at these levels, so you might see some impulses here. We got first move here, then the wave 2, 3, 4, 5, and then we are coming down in wave 4. So I agree to the Messam's view to the extent that we might go higher from here onward. Because if we go if we go one step down from these levels, not here, if we go one step down from these levels, we can see that this whole move requires a correction. We got the low of 21,712 back in 2018, December 2018, and remember, this is the same zone when we got the correction in S&P 500 index. Both S&P 500 index and Dow Jones made the low back in December 2018, and since then, post Christmas, we got a massive run in the month of January and February. So Santa Claus came in, and we got a rapid acceleration on the higher side. So we got a massive acceleration. Initially, we got a month of January, very good acceleration, and since the low, it is almost 20% up from the low of December of 21,712. It went as high as 26,100. So we got a massive move of almost 4,000 points, and same is the case in S&P 500 index. We got the low of 2350, went up till 2820. So what I believe for the time being, that we might anticipate a correction in wave 2, because if wave 4 is completing here, we might get a correction in wave 2 before we go ahead in wave 5 and make a new high. I hope I answer you. Best shot of the century. Yeah, of course, because if the wave 5 is going to complete somehow, because we are in the wave 5, that is for sure. Because in S&P we have seen that we are either in wave 5 or wave 5 has been completed and the bearish move has started already, or and we are in the correction mode right now. Same is the case in Dow Jones for the time being. So we are getting one last run up, possibly one last run up before a big bearish move. So finger crossed. And one important thing I would like to highlight here is that this is a lower low zone. Here we got the first low back in 2018. Market went up in October, so we made a high of 26,616 here, and then we made a high of 26,951 here. So apparently a new high, and then it went down again. So it went down again, went up now, could not make a new high, and if it goes below 21,000, if it goes below 21,000, so remember, this is the confirmation of wave 5 has touched now. Wave 5 has peaked out, and now the wave A of the larger degree will start in wave 4. So it will be a very complex thing. So thank you, and this is it, guys. I hope you like today's live session, and if you did, hit the like button and subscribe to my channel, and keep watching Market Think Tank. I'll be coming live. I'll find a cross. Until next time, take good care. Bye bye.